what a day, what a day, what a day this is going to be. Watch this.
Well, I should have known today would be an interesting day. In my email box this morning, adjacent to one another, I saw an email from a good trading friend of mine declaring the return of Attila. And then next, some spam for a carnal revitalizer, which is the last thing I need. So, interesting. So, kind of a foreshadowing there. Very great, exciting, interesting day on the market. As I've said so many times, there's no such thing as a happy trader because you either shouldn't have been in a certain position or you weren't exposed enough. But the thing I will say is that index after index and ETF after ETF has broken major trend lines today. And before I get into my thing here, I will say this one thing. The absolute best thing that could possibly happen for bears right now would be a push higher. I don't mean to new highs, but I mean a push higher. If for some reason the jobs report tomorrow causes comfort and great joy, and we have a big rally, but not to new highs, that would be just manna from heaven. I am intentionally light right now. I have 91 positions, all of them short. For me, that's light. Heavy for me is like 200 plus. So I had a great day, but it wasn't spectacular because I've got an absurdly large amount of money on the sidelines, and I really don't want to deploy that until such time as I feel that the prices are attractive. I closed nothing today with the exception of just my regular day trading buddies, SSO and so forth, but everything stayed in place. Anyway, the theme today isn't going to be so much a market commentary because I think that tomorrow is really going to, that is Friday, is going to just tell us so much. But I was going to look at ETFs, and I've got a list of ETFs. I have 500 of them, and I've tagged a number of them. And what I wanted to do is just, I'm going to blast through them in alphabetical order here. Not all 500, obviously, but just my tagged ones. Some I'll spend half a second on and just skip right through. Others I'll speak a little bit about. This is a bit risky for me because this is sort of like a father pulling out the slide projector to talk about the family vacation, because there's some that I just have so many things to say about, but I'm going to try to keep it succinct. So let's get started. And I'm just going to bang through these one by one. So we've got kind of a cluster of commodity ones. And like I say, most of these I'll just sort of zip through. The ones that I find compelling and interesting, I will stop on. DIA, this is a huge one, of course. This has been a really interesting one to follow because we can see here this very important red trend line, which back here, back late in July, was sort of at a fascinating point because on the one hand, it was up against that red trend line, but on the other, it had this inverted head and shoulders pattern going on. Obviously, it pierced right through that and kept moving. But now it's to this very interesting gap right here. So as you can tell, the prices on the 23rd of last month kind of diddled around in there, and that was the turning point. So anybody who took this gap seriously has done quite well for themselves. So going back to my earlier theme, what I would love to see would be a push back into this area, maybe 200 or 300 points up on the Dow. Oh my Lord, that would be good. In a sort of paradoxical way, if we just sort of keep plunging, that actually, present position notwithstanding, make it tougher for the bears because it makes it tougher to get great reentry points. So when you give a call to God tonight, just say, God, I know you're a bear because you have a good heart, and I would like you to please kick the DIA up to around this area so that we may sup in paradise. So moving right along here, so DIG, clearly the breakout that never was. Bad news for the bulls on that one. It's Doppelganger Doug here. Had a really good day. Energy is a weird market right now. I'm actually not doing much with that. UNG, of course, is quite fascinating. And I shorted USO today, but Dig and Doug are funny shapes, not very clean charts at all. Let's see. DZZ. This is the... Now, allow me, this is like the slide thing I warned you about earlier. Allow me just to say something. I'm so frustrated with my 401k. It's all cash now. It's just sitting there. It is dead money because our dear friends at Principal Financial Group thinks that people can't be responsible for their own money. They suspended ETFs about a month or so ago. It has completely hamstrung me. It's wrecked me on that account. I've had God knows how big that account would be if I had still had my trading power in it. But it's just cash. And I'm trying to find a way to just dump the account. So Adios Principal, you jerks. The reason DZZ reminded me of that is because they forgot to restrict that one. So that's the one ETF that they didn't restrict, and it was an accident, I'm sure, on their part. But sorry, one instrument just doesn't cut it for me, and the mutual funds just don't cut it for me either. I'm sure people are thinking of Mike with this chart. Fine. Moving along. Isn't this interesting? Maybe you should make yourself a cocktail while I'm going through this, because a lot of these just are. Now, the international ones are sort of interesting, because yesterday they went to new highs for the year. But I still think these are very exciting shorts. Here's Taiwan, for example. Really nice. All these international ones, the EWSs and Gs, and Mexico and Brazil and all over the world. Wonderful, wonderful, wonderful patterns. Here's FAS. Volume today, pretty substantial. But FAS and its brother FAZ, big day, 11.74% on this one. Wow. People with FAS making money. Man bites dog. FXP, this has had a big run. It's typically when it just these loop-de-loos up to this way, it encounters some resistance.